The US markets wrapped up one of their messiest ever weeks on Friday, recording their worst finish since the 2008 financial crisis. Investors remain jittery about the direction of the economy despite hopes for government and central bank action to combat the coronavirus pandemic. The Standard & Poor's 500 fell by 4.3% on Friday to end at 2,304.92. For the week, it lost more than 7%. The index had its worst weekly performance since the financial crisis in 2008. We had years of low volatility and rising markets, and this virus crisis made it all come to an end at once, market observers say. There is no end point in sight, and that's causing panic because people are saying, "I just need to hold some cash." Meanwhile, the Dow fell back below 20,000 after wild price swings. The Dow Jones Industrial Average tumbled by 4.5% on Friday to close at 19,173.98. For the week, the blue chip index dropped by more than 17%, its worst one-week percentage drop since October 2008. Stocks erased early gains after Andrew Cuomo, the governor of New York, a hotspot for coronavirus cases, banned all non-essential travel, mandated non-essential personnel stay at home, and required all businesses to shutter if they do not fit specific criteria. Members of the U.S. President Donald Trump's economic team met on Friday to launch negotiations with Senate Republicans and Democrats racing to draft a $1 trillion plus economic rescue package. In the meantime, the Nasdaq Composite lost 3.8% on Friday to close at 6,879.52. For the week, it declined by 12.6%. According to analysts, the one glimmer of light in this dark period is that Asia and its supply chain is recovering faster than expected. Even though consumers and investors across the US and Europe are in lockdown, there are signs that the global supply chain is starting to normalize over the longer term. Investors are also encouraged by more steps from the Federal Reserve and other central banks and governments to support credit markets and the economy. The Fed said on Friday it would extend its asset purchase program into short-term municipal bonds to keep credit flowing. Among stocks in focus, investors are finding safety in some of the larger tech companies with strong balance sheets that will not only survive but look compelling at these valuations once the pandemic is over. Thus, workplace software maker Slack jumped by 5.8% on Friday. Shares of Slack ended at $22.23 on Friday, logging a 13.4% gain for the week. The company posted encouraging fourth-quarter earnings that suggested it would be able to make it through the coronavirus storm. The company's revenue rose by 49% annually to $181.9 million, beating estimates by nearly $8 million. Its non-GAAP net loss narrowed from $30.4 million to $20.9 million, or 4 cents per share. Meanwhile, speaking of the worst performers, investors thought that Apple might make a strong end-of-the-week push amidst a report that the iPhone 12 release is still on schedule. As it turned out, the opposite happened. Apple stock extended its losses, falling by 6.35% on Friday to finish at $229.24. For the week, the tech giant lost 17.5%. This week, Apple shares have fallen below $1 trillion in market value for the first time since September, leaving Microsoft as the only US company with a valuation above the $1 trillion mark. You've watched a weekly financial review on Insta TV with me, Anna Kasatkina. See you back soon.